Welcome back. You are watching Market Movers, but we are in an exclusive conversation. In fact, it is all about making money, and it's the technology that drives and makes making money happen. We are in an exclusive conversation with an industry thought leader on technology, innovation and regulation. David Craig, President, Financial and Risk of Thomson Reuters, joins in. Morning, David. Thanks for joining us, and of course, welcome to Bombay. David, first up, it's a fast-paced world. It's all about digitization, data explosion. It's all about tech and money, really. But both of them are moving at a very fast pace, extremely swiftly. How does this dynamic play out? Is it money chasing tech, or is it tech that's keeping money on its feet?
Well, good morning, and thank you for inviting me to the show. It's a great question. There's a Fin-dustrial revolution happening around the world.
That's the new word coined.
Yeah, at the moment. It's exhausting. I've been in the industry for 25 years. I've yet to see something moving quite as fast as it's moving now. Is it the data chasing the money or the money chasing the data? Honestly, it's a lot of both. And it's happening globally. It's happening in London, New York, in Bombay. It's happening in Cape Town. And you are seeing a complete change in how people are thinking about how financial services should operate, should work, should deliver services to consumers. It's very exciting, but for maybe the world's oldest fintech company like Thomson Reuters, we have to keep pace. We have to keep up to that. We have to embrace it. We have to actually help it happen as well.
Right, and this brings me to the next question, David. You said this is happening in, be it New York, London, Berlin, Paris, Mumbai, Tokyo, you name it, and the world seems to be connected for whatever it's worth. And then you have Trump, you have Brexit, which is actually going against coupling or going against globalization. It's reversed. I mean, most of us are now beginning to look inward again. So again, this is a dichotomy, I'd imagine, because you'd imagine technology brings everything closer. This time around, the world is trying to move away from each other despite having technology that I'd imagine brings you together.
Yeah, we are living in this paradoxical world where we run a global platform. It operates in 190 countries. It delivers data at milliseconds around the world. You'd think that it's easier to transmit data now. It's almost free. The internet's there. Well, actually, the paradox is it's not. National interests, balkanization of regulation, data privacy actually means it's much more expensive to get data and capabilities around the world. We talked about fintechs. Great ideas, great people, money, capital. They can't get through the firewalls. They can't get in. One of the things we can do is we can help them get in, because we're that trusted provider with roots into our clients that they know, they understand, and so we can bring that capability into their firewalls and through that in a way that's getting so much harder with the national interests taking sort of more concurrence in the world.
Hi, David, and this brings me to my next question. You said it's all about explosion of data and it's all about digitization. I do agree data drives everything and everyone, and that's what your cutting edge is, because if you've got access to news or data, that would probably help you create money or create wealth over the medium or long term. But as much as data is a prized possession, it still is very easily available. Most things are a Google away. If not, and okay, let me extend that conversation ahead. I have people who've said that for ₹1,00,000 a year, we can provide information and data to you. How difficult has business gotten? Because while this is so important, and a brand behind that is more important than that, it's still easily available. So how do you get down to making money out of this?
Well, so that's a great question. And there's a huge difference between just information that's out there and really trusted information that can give you answers to the key questions you're trying to ask. You're trying to make an important investment decision or trading decision. Yes, there's a lot of data out there, but our job is to shift through signal from noise to signal. How do I find the thing that's really important? We collect a petabyte of data a day. We transmit on a big day 80 billion data updates in 24 hours. What we have to deliver is trusted information on which you can act. And so yes, you can get data for free. Make the connections, join the dots, understand what drives who, what's connected to who. That's actually still quite difficult, and that's where technology plays a very, very important role.
So it's not just getting information, it's comprehending that information for consumption.
Yeah, I was in our office this morning and I saw a fantastic demo of where we've taken public and private information around an investment company. We've looked at the beneficial owner, the supply chain, their resellers, the owners of the company, and mapped that data together. It's actually very difficult. And you look at the tool and how it does it very visually, and you think, wow, that's a very powerful investment tool that I've got. All of that data was free, but actually joining it together,
putting it together,
that's hard.
Crucial.
That's hard.
Execution, I guess, right? David, and I want to talk about the wealth management industry, because that is something that we do. We talk about stocks, we talk about equities, research, and everything and anything that impacts that. Retail investment in India is still, I don't know, is still very low. But of course, most are expecting this to only grow as time goes by. How important is technology in the wealth management industry, and has it changed in the recent past?
There's a huge change happening globally. I mean, firstly, in India, the industry's been given a gift, and demonetization has pushed billions of rupees into the system, and it's now looking for an investment home. Data plays an incredibly important part now, because when you want to put that investment in a safe place, I want to know those connections. I want to understand what I'm investing in. Is it safe? Who is it selling to? Who is it buying from? What we're doing around the world is working with our clients on huge data pooling. We call it big open linked data. What is the interrelationship between this company and that company? How can I find alpha that isn't easily discovered by making that connection and joining that link? And I see that in India now really taking off. From a position of maybe being slightly behind other parts of the world, I can see over the next 5 years a real acceleration in data and information in asset management and in wealth management here. You know, one of the reasons we're investing so much in India is to take advantage of that opportunity that we see in front of us.
So how does this work? So you believe that are you providing information to wealth management firms in order to make better decisions, or are you helping wealth management firms to go out there and acquire clients, because it's a growing industry and there is a struggle to reach out to everyone?
I mean, our job is really to help both the asset management firms who are creating the products and creating safe, good, high value return products, and to do that well, the portfolio managers, the analysts and those people, and we do that globally. Our job is also to help the wealth managers who are advising their clients on, well, which products should I buy for the risk profile that I have, and how do I best manage and look at my portfolio? How do I get the latest news? How do I get the latest information? How do I do that? That for us is a multi-billion dollar business, and so clearly India is an important part of that investment strategy that we've put in place to capture the new money, the new investment that's going to take place in the market.
David, in the last couple of months, I think this is post-Trump being elected, we've talked about how the Indian IT industry is struggling because we're not up to speed with automation, artificial intelligence, case in point. How important is automation for the BFSI industry, and how does India fit in the puzzle as compared to our peers?
Well, I think it's a tremendous opportunity. I've been involved in working with India for nearly 20 years, and the first sort of stage was, well, how do we do wage arbitrage and put jobs that were onshore into the Indian market? That's completely changing now. We have our largest employee base actually in the world is in India. We've got tremendous talent that is looking at how do we automate the processes that we have. So a good example of this, in the last 3 years, we've at least tripled the amount of data that we're collecting, but we've done it with the same employee base that we have in India. And that is because of the tools and the investments that we've made in automation. Some of the most interesting areas of machine learning are around how do I find the data and how do I translate unstructured data into things that make sense and make those links. So we've invested for probably 3 or 4 years in automation technology here in India, and it's been really successful. So I'm actually always impressed when I see the talent that we have and the ability for them to do that. But I do think it's something that all industries should actually pick up quite quickly to do that. I find the argument about, well, where do jobs sit, sort of a little bit strange. It's a little old world. To me, it's where does the talent sit that actually can invest in technology to do the automation that we need to do.
It's versus low-cost labor. It's about talent is what you want to chase.
That's the old debate.
It's a new world now.
It's a new world.
Right. The last few months, or rather the last 1 year, we had a couple of Black Swan events. A lot of people call Trump Black Swan event, but I'm not going to comment on that, and neither am I going to ask you for your comments on that. But what have you made about Brexit? That was a big worry point. It's not just the UK. There's concerns that countries like France, Netherlands could also see an upswing in terms of exiting the Eurozone. And of course you have Trump as well, who's consistently talked about America first and only America first. I think that's the worry. I mean, it's great to have your country as first, but not just your country, right? How are these geopolitical risks playing out when you talk about technology, talk about India, talk about an ever-growing industry like financial services?
Well, it's interesting. There was a report out this week on the financial centres around the world and who was up and who was down. And London and New York are still 1 and 2, but lost the lead slightly. Other centres, Toronto, Canada picking up, Asia obviously picking up. And what I said to the team is, look, we're living in this uncertain world. Who knows really what's going to happen in the next 5 years? I think the right strategies is to be multi-country, is to hedge that exposure slightly, so that, from our perspective, for example, well, if some banking operations have to move from London to Frankfurt or Amsterdam, that's okay. We'll pick up the clients when they move. We'll pick up the business when we move. I think the companies that are challenged are the companies that are just focused on one country only, and they have exposure on that country. That's more difficult to do it, because honestly, I think it's very hard to predict these events. I think what's actually quite exciting about the markets at the moment is, for the first time in many years, you're getting people on both sides of the opinion. And that makes interesting times for trading. And if you look at Brexit, for example, June 23rd, pound dropped from 150 to 122, 123 in a couple of hours. That's an extraordinary market movement. A once in a 20-year trade event, and now these seem to be happening every year. It's actually quite an exciting time if you're in the market. It's a good time for us, because clearly we break the news, the information is required. I think you've got to be multi-country, multi-hedged to deal with that. You can't bet on one opinion or one outlook. Look at the share prices of US bank stocks. They're up 20-30% after the Trump announcement. Now people are re-looking at that and saying, well, actually, is it going to be that rosy and that good? So reality starts to strike in. You've got to be prepared for that and not, be sitting there calling the Trump a black swan event. It's not a black swan event. It was actually quite predictable.
Was it? Okay, we could argue that
to do it. So you've got to be ready for that market movement, and you need information to do it.
Right. Talking about information, I want to get a sense from you on the fintech industry. What is the outlook? What is the road ahead the next couple of years?
We're seeing some fantastic changes happening in machine learning, in areas like distributed ledger, and compute analytics. The honest truth is that 4 men or 4 women in a garage, with the amount of compute power they can access to now, can do incredible things very quickly. Here's the challenge, though, which is, and the expression I use is, one man or woman's fintech is another man's virus. How do I get distribution? How do I get through those firewalls? How do I do that? And that's where traditional banks, the incumbents, if you like, need to work with the fintechs to give them access to their customers, to give them access through the firewalls. I think the regulators have an important part to play on this. I think I can see the difference. I work a lot with the regulators, between regulators who are more interested in competition versus protection. How do they strike that balance? How do I encourage the sandbox type activity that allows fintechs to work? We've signed a letter of understanding with AP, the FinTech Valley. We're putting our platform out there with our data and our APIs, because we're trying to get people on board to innovate, to actually use our data, and to do that. I had another example this morning where we talk about the power of data. One of the fintechs is using 15 years of trade history to understand patterns and behaviors, and to have machine learning to do that. So that 15 years of trade data isn't very easily accessible. You've got to find that. We provide that data. We provide the tools. The fintechs can then innovate and have specialists that do it well. And I think, for me, I don't think the fintechs win or the incumbents lose. I think there has to be an ecosystem where they both actually work together. The countries where I see that happening well are the countries where I think the financial system will evolve the fastest.
So India being case in point.
Case in point. The countries where the regulators lock down and don't allow that kind of innovation, I think, are going to be further behind on some of these opportunities.
David, on the guests, like you said, a year for business, how open are banks, financial institutions in Bombay? I'm guessing you've met a few of them on your visit here. Are they willing to share information? Are they willing to give information? Because I'd imagine compliance, security are some of the concerns incumbents would have right now.
Yeah, we work with all of the banks. They give us a lot of information about the market and what's happening, the contributed price data and those things, and they're very open. I think they traditionally understand how the markets operate. They understand their role.
Are they willing to invest in technology?
Yeah, they are. And I think, I would admit I was rather surprised the fintech market is not as large as it is in other areas. I think it's catching up. I'm rather surprised not to have seen more banks creating more of the labs and the things that you see, in London, in New York, in Tel Aviv, in Singapore. I think there's some room to do more investment in this place. I think that's coming as people start to learn about the new technologies and what's happening. But there's a lot of noise out there too. So it's maybe not a bad thing that people are being a little bit more selective about where to invest, because I think there has been a lot of noise. I think this year will be the year where a lot of fintechs actually discover reality and maybe not succeed as well as they thought they might do. And so it's not a bad time to be investing with that sort of firmer view of where the investments should be made and where they shouldn't be made.
David, very lastly, it's all about consolidation as well, and business cost pressures, because I think that's what encourages one to go out there and look at tech. What are your thoughts on that? On
industry consolidation?
Yes.
I wouldn't pretend to be an expert of how that happens. If you look at the rest of the world and the pressures that are on the banking system, you would naturally think consolidation would happen.
That's the name of the game, yeah.
But actually regulators aren't necessarily keen on further consolidation. And I think that leaves the banks in a really interesting place, which means they can't consolidate their way out of the cost or the regulatory issue. They have to innovate their way through the regulatory issue. I think customers are a bit fed up with the banks blaming regulation on why the service isn't good enough. You can do now on your iPhone incredible things that the banks can't do, and I think there's a pent-up demand on the customer side for services that really count. So I think it leaves the banks with a situation that says, have to invest, have to understand these technologies, have to get the data and information that makes the market work. And we have to deal with, the significant regulatory changes that are coming. We haven't talked about GST, for example, but another big regulatory implementation that requires systems, data, information, and technology.
And is India ready for this at the core of it? I mean, India Inc., regulators, do they have systems in place to deal with GST right now?
There's a lot of work happening to get ready. I mean, the timelines
it's 90 days away. How quickly can one move?
Well, we're obviously heavily involved. We're a leading provider of GST systems around the world. It's something we've invested heavily in here and hiring the people and the talent and bringing the software to. So people are getting ready. But, you name me any big regulatory change in the world, GST, MiFID II, FRTB, is everyone ready for these changes? No.
You're never ready till it's there.
But you have to show that you're preparing and you have to prove to the regulators that you're getting there. And I think
is the regulator ready? Is the tax collector ready?
I don't know. I think they've built some of the systems that they need, but I think the industry is going to have to work fast to get this done. It's an enormous change. It's a change for the banks and the corporates as well to do it.
90 days enough to make that deadline, you think?
We would hope so, but there's a lot of work to do.
We are the hopeful sorts. So, well, just very lastly, and I'm going to ask you this before we completely run out of time. How do you manage reputational risk that's related to, firms and businesses dealing with third parties? And I'm guessing banks, wealth management firms, BFSI in particular, would be dealing with these challenges.
I think it's a really interesting question, and it's a global issue that people are facing with. We are the leading provider of information to help people manage exposure to money laundering, terrorist financing, financial crime. Over 100 million entities are checked every day with our data. Companies around the world are using this. And I think that there is if there isn't a regulatory challenge, there's a reputation challenge to really look at the supply chains of who you're working with. And if Indian companies need to be selling, which a lot of them do, big proportion of their wealth comes from outside, to countries outside, they need to convince those firms that their supply chain is clean, free of corruption. I think over the next 10 years, this is going to be a huge change of industries globally. I think it's a major issue for Indian companies to do this. It's one of the areas where we're investing a lot of money to make sure that those capabilities are ready for India. It's quite opaque. There aren't many standards. It's evolving, but it's driven by data. It's driven by understanding who are my suppliers.
And the trail of money as well.
And the trail of money and where did it come from. And again, back to your point about, well, data seems to be free, but actually understanding those links and those interrelationships is very hard, and you've got to have some real expertise. To build that up. But I think it's an area where investment is needed, because it's long overdue that this was really focused on.
And these are the new concerns and problems of the future as well, right?
Yes.
Good talking to you, David. Thanks
for
coming by. With that, it's a wrap on this edition of In Conversation. Thanks for watching.